I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with my partner, Mr. Nick Hodge, fresh back from the Vancouver Resource Investment Conference, which we'll get to, obviously. Mr. Hodge is also an investor and the publisher of Daily Profit Cycle. This is the 254th episode of our weekly therapy session that we call Investing in Bizarro World. We're going to talk BRIC. We're going to talk Roundup. We're going to talk markets. A lot of stuff going on. We're going to touch a little bit on societal stuff eventually, because we always end up going that way. But before we get to all that, Senor Hodge, it was great catching up with you in Vancouver. How goes you today, sir?
It was pretty brief, Gerardo. I feel like it was a flash in the pan. But no, it was good to see you, to break bread and to get some drinks and to obviously, talk junior mining with executives and investors, etc. So it was a busy weekend. There was multiple events going on. You mentioned Roundup. You mentioned the Vancouver Resource Investment Conference where I was speaking. There was also the Metals Investor Forum, in which a bunch of newsletter writers bring companies, and I was able to stop by that briefly on Saturday afternoon. So an action-packed couple of days, and again, good to see you and some readers as well, I should add, at the conference. So I'm sure we'll talk about it, but how are you?
I'm well. It was great to catch up. It was brief because both of us, I think, the whole time there, and you were there longer than I was, but just back to back meetings, and really didn't have an opportunity to see everybody that I wanted to see. But it was an interesting conference. First off, I'm speaking specifically to the Vancouver Resource Investment Conference, which is where I spent the bulk of my time. Got to give a shout out to Jay Martin and his staff. They put on a fantastic event. It was well attended. It was busy. He put up some numbers that I want to cite that were really interesting to me. And actually, I tend to be optimistic on all things usually, right, Nick? And this actually gives me some hope here, because we definitely need new blood in the resource space, specifically on the junior side of it. And this was encouraging. So Jay tweeted that 24% of the audience was under 40 years old. And it was evident if you were there. 8% were under 25. And so 35% of the audience also had never been to one of Jay's events before. So I am encouraged by those numbers. I am encouraged by the curiosity. We haven't yet had a market, although we're starting to get one in uranium. It's developing, but we haven't yet had a market where the youth gets to get greedy and really see what it looks like to go from speculating to life-changing money. And I think that's coming. I think those markets are coming.
I'm the youth.
I like that. That's funny. I think it's coming. I think the second half of the year is absolutely going to be one for the books, a memorable one. And look, we're seeing it across many sectors. The setup is really, really good. We're going to talk lithium and copper here in just a bit. Oil made a 5% move this past week higher. We'll talk oil and energy. I'll get your take there, but I would love to hear your take on the actual conference and just kind of the tone of it.
Yeah, I'll give you my pessimistic tongue-in-cheek response first. It's that I'm not sure.
This is why we work well together, guys and gals.
I'm not sure how much capital those 20 to 30-year-olds have. When I read the reports about cash on hand and assets and accounts and things like that, I don't think junior mining companies are keeping the lights on with clicks, which is seemingly what anyway, what interests those people. I see a lot of videos, again, the Twitter accounts about resource investing, and I wonder how much capital is involved in that. We talked about toothpicks last week. But on the bright side, it's good to see the youth there, because we always talk about, what takes this supercycle to the next level. How do we attract the younger blood? How do we make them understand that in order to have iPhones in their pocket, and emissions not in their air, that they have to extract resources from the ground, because after all, if it can't be grown, it's got to be mined. So I did see a lot of younger folks there, and of course encourage them to learn more and get interested in the space. And Jay has done a good job of, like the MCs for each of the workshop, for example, are all pretty young kids that have podcasts and things like that host, introduce the speakers throughout the day. So That might also be why there was younger folks there, because people like that, getting the word out and doing some of the advertising for VRIC. But it's funny, not funny, because in talking to the CEOs, and I was on the phone with one yesterday, and we were having this conversation, what was the sentiment there? And he was saying, I can't quite put my finger on what the sentiment was. And I said, yeah, it was busy. There's a lot of meetings, well attended. I saw Ross Beatty's talk with Charlotte from INN. It was standing room only. I mean, four people deep in the back, standing up. And so in that respect, it was upbeat. But talking to like deep-pocketed investors and talking to the companies themselves, it didn't seem as upbeat. That's what I told this guy. He's a copper CEO, and I was saying, the investors, the retail investors seemed upbeat. Maybe the kids that we were talking about, not deep pocket, for example, but the actual companies that are trying to raise money weren't so upbeat. And you were almost saying the same thing. We were talking before we recorded. There's companies that have 10, 20, $100 million in the bank. And, the case of Patriot, which I'm sure we're going to talk about later. But then there's companies that, are essentially on their knees, having to relinquish projects that they had options on. They can't make their work obligations, and they're figuring out, are we going to raise money to keep the lights on? Are we going to do some mergers of $3, $4, $5 million companies, put things together, see if we can survive, or are we going to hang it up? And so it's an interesting time, because that's really all the way down on the micro, right? That's in 3-block radius in Vancouver. And then you zoom all the way out, and it's sort of the same thing on the macro picture, right? Like, can copper get to $4? Like, are we going to have a recession? Is it a soft landing? Like, I'm excited about a copper bull market, but I don't think it's time yet. So it's all the same,
Robert Friedland says the copper space is a powder keg waiting to explode. And now we all know that Mr. Friedland can tell a story, but we also know that he's really good at front-running markets and major trends and profiting off of them and positioning shareholders sometimes to also profit off of them. So to answer your question, I do believe that copper bucks the $4 mark. Does it happen next month or the month after that? Again, no crystal ball, but the trend is clear to me. I do believe it's a second half of the year story. I also believe, and I've said this before, that this is the time to position for that. Are we going to have a recession? Look, I've stated here that at least here in the U.S., I feel like we're already in one. I don't care if the Dow, the S&P, and the NASDAQ are making record numbers. That's not real life, folks. Real life is 60% of parents are now providing financial support through rent, mortgage, insurance, and car payments to their adult children. Let me repeat that. Nearly 60% are providing some kind of substantial financial support to their adult children. And so when I read those numbers and I'm meeting with companies and IR people and I'm getting pitched the 5-cent financing.
Those were the adult children that were at the meeting.
Those were the adult children. you took the punchline. Damn it. I'm listen, man, this part isn't funny, but there's IR people not being paid. There's CEOs foregoing salaries, and there's going to have to be a consolidation. And by consolidation, I mean a lot of these companies have to go to junior resource heaven. I do think it's a stock picker's game now. And look, even if you're picking good stocks and you're vetting stories and there's quality assets, some of that stuff is just stuck in the mud right now. And we're definitely going to need new capital in the space and a macro backdrop that really highlights the opportunity in the resource space specifically before we see that run that is coming. We know it's coming. It's all cyclical, but when moon, I'm the guy that thought Patriot should be, definitely at 20 and at 30 based on peer comps and what, is clearly the most important mineral discovery of the last several decades, right? And we'll talk Patriot in just a second to speak to the quality of that. But whether it should be at 20 or 30 doesn't mean a damn thing. It's at 8, and that's at 8 after being at 6. So that's just the reality of it, folks. Let's backtrack a bit. Let's anything else to add on Vancouver and companies needing to go to junior resource heaven and a consolidation that can present opportunities, obviously. But any thoughts there?
Well, just a couple of broader things. You were talking about the kids, getting money from their parents and the economy and the stock market at record highs. So we don't have to do the whole macro thing, but we often say the economy is not the stock market, right? And so
Correct.
the stock market has hit new record highs here. At least the S&P has over the past couple of days. Interesting to note that's, as we know, the Magnificent Seven, maybe the Magnificent Six. You guys probably know this whole narrative, right? Tesla missed earnings, is falling out of bed. Meanwhile, Microsoft surging to a $3 trillion market cap, carrying the entire market because as it hits record highs, like 70% of the stocks in the market were down, for example.
Yep.
And then the economy is interesting as well because, you mentioned the 60% of parents, having to provide sustenance or whatever to their kids. And yet we just got the GDP number, and it's a decent 3.3% when I was certainly expecting less. And then you can argue about how that number is calculated, but without the tinfoil hat, 3% growth is 3% growth. And so, it's interesting. And so maybe we can talk more about macro later. And then the last thing I'd say is relating it back to the fourth turning. So the high levels of cohabitation, the codependence on multi-generations is part of that, right? You have, what am I going to say? With the silent generation, people started very young, right out of high school, getting married, having kids. So that age is like 20 to 23. And then by the 19, to where we are now, people wait all the way until they're 30, right, to have kids, 35. And so that's part of like the generational turning as well. So yes, they're providing for them. And also because, and now I'm sort of all over the place, but it's because that generation has more too. Like the baby boomers won the lottery at every single turn, right? With housing and 401ks and cashing out of IRAs before 2007, whereas the Generation X and the millennials so far have been on the inverse of that, right? Starting out careers right in 2007, for example. And so that accounts for some of that statistic that you said, but it's a very real thing. And so I would like to talk more about the fourth turning as well later, but what's next?
No, I think this is a perfect opportunity to talk about the fourth turning. We can get into the markets here, and Patriot and lithium and all of that here in just a second. I think it's a great opportunity to speak on it.
Well, I finished the book, and so I don't want to recap the whole thing. I'm not going to give you a book report, but essentially 3 outcomes: major financial crash, civil war, international global war, or some overlapping of all 3, right? Yeah. Culminating somewhere between 2030 and 2033. These are just the high level takeaways, right? Yep. Implications, depending on which of those 3 scenarios play out, you can figure out some of the implications for yourself based on, war, et cetera. But also taxes, right? So what happens is like, the nation coalesces around some big ideas, right? And they put differences aside and they finally start fixing stuff that is blatantly obvious needs fixed, but they couldn't fix for so long because of partisanship, et cetera. One of those things is taxing the rich, Gerardo. So they're going to have to pay for all these bargains, right? Essentially new deals, right? To keep Social Security going, to provide maybe even some child care for the middle class, et cetera. And so taxes are going to go way, way up. And those are essentially the big takeaways as I saw it. So the timing has been kind of fine-tuned and the paths forward have been outlined, and sort of what happens afterward is becoming clear as well. And it's, not that much different than after World War II and the New Deal when they raised taxes, et cetera. And so and I guess last thing I would say is that's still 10 years away. 2030 to 2033 is a long time away. You've got to get past, 2 more elections. And you need a rising of the great champion, which is really why I wanted to talk about this. So, and that's one of the aspects I forgot from the previous book is there's one or more old heads that pop up to like basically act as grand wizards, right? Like to chaperone Gen X and the millennials through the crisis.
Not
right?
the KKK type folks, like the real Grand Wizards. Just to be absolutely clear, before I get the hate mail. It's like the Italian guy said, the Grand Wizard in front of the Mexican guy, and they didn't say anything.
So I was thinking, who is that going to be? Because nobody like readily comes to mind, at least not in the existing political theater, right? But then I saw this week that Mr. Jon Stewart is going to be hosting the Daily Show again, at least one day a week, starting soon. And he fits the criteria. He is an early Gen Xer. And he certainly made sense to me over the years, whether it was, the Iraq War, the Bush presidency, even through the Obama administration, holding his feet to the fire for some of the stuff that he did. And so I
Even
think he's got a good
COVID.
head on his shoulders, and he makes a good candidate for a great champion.
Yeah, no, and look, he speaks his truth. He backs it up with facts, and whether you agree or disagree with this style, you have to agree the man is brilliant. He can debate like very few people. His interviewing is some of my favorite interviewing that I've ever seen. The way that he can develop a conversation, take a point, and completely out debate you on positions that people hold near and dear to their heart, but maybe hold those opinions and positions not based on fact, but on political partisanship, right?
Mm-hmm.
And it's notable. Look, obviously he leans left, but it is notable to me that even during COVID, he went on the Colbert Show. He was a mentor to Colbert and was one of the first lefties to say, COVID fucking came from the Wuhan lab because the lab is fucking right up the street, and you're not going to get me to believe that there's a fucking lab up the street from where supposedly the bats got it, and it didn't come from the fucking lab. He's like, this is just common sense. And I remember Colbert kind of pushing back, and Jon Stewart basically saying, I really don't care. I don't have the facts to prove this in this case, but I do have some common sense, right? And so it's refreshing to have somebody that can take the other side of what typically the side that he chooses to align himself with, which usually is, leans left. Refreshing to see him be able to take another position just based on, critical thinking, which we have very little of in this country right now. So I would welcome Mr. Stewart throwing his hat into the political arena. I think it would hopefully encourage, people from all sides that maybe aren't the traditional politicians to get involved, right? I'd love to see a Mark Cuban, someone like that get involved. I don't know if there's too many skeletons in that closet for him to do so. I think it's why he chose not to this last go around. Something about, they start digging into everything. And, when you're young and you're rich and you're out there, guess what? It gets really easy to get carried away sometimes. And I think, him having a family and his kids being younger probably made it to where, let me wait, made him reconsider that decision. But, people like that actually have a skill set, that actually have been successful, that actually have, built things in the past. I would love to see it. And I hate that it's going to take a whole ton of volatility between now and when we see that. But again, the optimist in me is hopeful.
Yeah, and it doesn't have to be, they don't have to be a politician. It can just be like a voice, a guiding voice or whatever. So anyway, he doesn't necessarily have to run for office, but I thought it was interesting that, he was going back to the Daily Show. I'll have to tune in and see what he has to say.
Excited for every Monday from here on out. Absolutely. I will put it back on my little DVR thing. Let's get into the broader markets. I talked about brand new highs. Everything is awesome again, except for in the real world for most people, right? But as far as the markets go, all new highs. I'm perplexed. And again, I don't dabble in the major indices, right? I am perplexed that the numbers keep running the way the numbers keep running, despite data that doesn't support new all-time highs. Thoughts, Nick?
It's perplexing. This S&P at all-time highs. Russell, not so much. Russell's been going the other way, but, like I was saying about the tinfoil hat, I mean, if you just take the data on face value, it's perplexing that you had that 3% growth in the fourth quarter. Now that was down from, 5% growth in the third quarter, but, most bears were thinking it was going to be closer to 1%. And again, you can argue about how the number is calculated, but outside of that, it's seemingly Goldilocks out there, right? And I guess that's a good place to start, right? You can talk about, like the ice of a pond or an avalanche, where you don't know how soft it is underneath, but the surface is still continuing to hold up, right? I guess a pond is a good one because I was duck hunting this week and half my pond is frozen, and it's been quite cold, right? Like it was below zero a couple of weeks ago, but recently it's been above freezing, and I had this one duck that was sitting out in the middle of the pond on the ice. This is a really good analogy, actually. And so I had to go get the duck, right? And I don't have a dog, so I was like, oh, am I going to walk out on the ice? And so I was testing, like I was walking slow, like you do on ice, and I heard the cracks, and it was supporting me. And ultimately, I did make it all the way out there to get the ice, and it didn't break. But you can't see what's going on under the surface. Is what I'm getting at here. And what's going on under the surface is very interesting, right? So I don't know what the conclusions are going to be here, but I'm going to tell you just, I guess, everything I'm seeing. The volatility continues to be non-existent, and so that means there's a lot of call buying on the S&P, and that's one of the things that sort of wags the dog, as it were. If you can get your thumb on the scale of the call buying options at some certain level on the SPY, then you can create a self-fulfilling prophecy. So that's one thing that's going on. The other thing I already said is yesterday, 5 stocks. Well, you don't know what yesterday is by the time you watch this, but when the S&P just hit new record highs above 4,800, those daily moves were being driven by 5 stocks. I mean, 20% driven by 5 stocks. And so the breadth isn't there. We don't have to get into the consumer, but the earnings aren't there either. Like it's earnings season and no one's talking about that. I mean, and you've got some companies that aren't performing well at all, including Tesla, which I mentioned earlier, that was in the Magnificent Seven, right?
Yeah.
That, had quite a rough week last week. And so, and then you can relate that back to the consumer, I guess, with the 60% stat that you were mentioning earlier.
Yep.
Parents are paying for their kids or whatever. So all doesn't remain well in the economy, and yet the stock market continues to hit all-time highs. And so it's confounding, it's perplexing, and I just look, right? Because, at the end of the day, that's what Mr. Dines would say, don't
Mr.
think,
Dines'
look.
old
And
advice, that's right. Yep.
I look at the dollar and I look at the rates, and they're strong and going up, and that tells me that the Fed's not going to ease as soon or as much or anyone thinks, which is the same thing I've been saying. Market still only pricing in now a 50% chance of a rate hike in March, a little bit higher by the time May rolls around, and that's sort of where it is. At this point, you're missing out if you're not in the broader market, and so you can do that a couple of ways through momentum stocks and otherwise. But I guess last thing I would say is, I keep limit orders set, as you know, for individual mining stocks and even macro stuff, and stuff's not cheap. Like I was looking today, it's funny because I was going to buy a healthcare stock today, and I logged in and I was looking at it. It was like $295, and I had already had a limit order set like for $285 based on the chart. So stuff's not worth buying out there either for me. So I still think stuff's going to get cheaper. I still think these stocks are climbing a wall of worry and aren't being driven by fundamentals. And I still view it as too risky for me to put my capital in the broader markets when rates continue to go up, dollar continues to be strong, and gold doesn't want to go back below 2,000. So anyway, a bit of a non-answer there, but that's what I see.
No, a great segue, and I want to touch on gold here in just a little bit, and the dollar, which is showing strength again. But you mentioned value, and you mentioned a couple of other things that took me to my Patriot Battery Metals portion of the podcast. Right, it was great to meet with management. Had a really good catch up while there. Sat down for dinner for a couple of hours, and so listen, it was a surprise to me. The day after I get back from Vancouver, after meeting with management, they played this really close to the vest, and kudos to them for that, because nobody likes a leaky ship, right? And so it was not a surprise to me what was announced, but the fact that it's happening this soon was a surprise to me. I thought this would happen eventually sometime this year. I had no clue it was going to be this quick and effective immediately. And obviously what I'm talking about is Ken Brinsden coming on to not only take over as CEO and president, but moving to Quebec to make sure that the project gets the attention that it deserves. And, I think his quote was pretty telling, right? The press release says, with exploration to date at Corvette demonstrating a scale that is material to the future development of the North American lithium raw materials and chemicals supply chain, the company has decided to further bolster its Quebec presence. Now, Ken's quote again, he said it's clearly one of, if not the best lithium raw materials development project globally. And so he said, my commitment to move to Quebec, build out the leadership team, and engage deeply with key stakeholders that will contribute to the project's success. You and I talked a bit off air, Nick, and it's clear to me that Ken and the family, Ken, by the way, anybody that thinks this is financially uh, motivated is out of their minds. He is absolutely filthy rich. He has no financial incentive other than more money, which he doesn't need, to come back and take this hands-on role and move his family to Quebec. So it's clear to me that he's after the legacy of us helping establish this, critical metals supply and chemical chain. And look, that would be a hell of a back-to-back, right? Coming off of Pilbara, what he was able to do there. I don't think he's moving his family with the vision of being there for the next 5, 6, 7 years. This screams to me, and clearly the market loved it, right? The stock, after hitting a low of some $6 and something, put a six handle up earlier this week, bounced back to the $8 level, nearly closing that gap that you had mentioned before where your order filled just a week ago. But the market clearly received it well. Tons of volume in Australia, solid volume here in the US, up 25% in 2 days just based on that announcement alone. I got to believe assays are going to start emerging out of the Corvette project here soon, and those 10 rigs should be turning by month end. The one takeaway that I did get from the team when I met with them in Vancouver was that they are hell bent on de-risking the project, which lends credence to my speculation, which is all it is, that Ken firmly believes he can get Corvette sold within the next 12 to 24 months. Because if everyone already knows the world-class nature of the asset, and the infill drilling that they're doing is meant to show continuity and take that resource into the reserve status to get that re-rating. That reserve status will also allow for bankable feasibility studies, internal models by majors, and will allow for a board to come in and make a substantial bid. And let's be absolutely clear, it will be a substantial bid. My 20, 30, even $40 price target that I've had from the beginning, and I said that was the end game, that is still firmly in play. Anybody that thinks that because the stock is at $8, that we're not going to see a $3, $4, $5 billion, market cap on this company, given the asset that's there and given the rebound that I think, lithium is on the cusp of getting to, is in my mind just wrong. We'll see. No crystal ball on when that happens. I've been wrong about the timing. Been pretty spot on about the nature of the asset, the management team delivering. This welcome surprise. Got to thank Blair. Got to thank everybody that got part one done. Part one has been extremely profitable for those of us that got in very, very early. Part two, I think, is going to be the part where people that got in, at $10 and above, all the way up to 17, where they're going to be able to make their money. And I don't think it's going to be a multi-year wait before you're profitable and in the green. So kudos to the team. Kudos to everybody that had something to do with part one. Jody DeRouge and Neil, the DeRouge Geological Consulting, and Neil McCallum, and that whole team. I mean, also had a large role to play. The Australian group that came in and put some cash up, a group out of New York that came in and put some cash up real early on. All of those pieces needed to be in play in order for part one to work. Ken guiding the ship on part two, and then Blair stepping over to the, what he does best, build stuff. And that's what he loves to do as COO. It's a beautiful fit. It was completely mutual from what I understand. And everybody's excited as all hell to move this thing forward. So couldn't be happier as a shareholder. Wish we had a bigger market cap. That market cap will come.
I wonder what French sounds like with an Australian accent.
Well, we'll find out.
No, I wish him luck. I mean, it's obviously a vote of confidence, and the market liked it. So maybe he'll have the je ne sais quoi that the company was lacking before. And I think that $8 level sort of acts as a magnet for a little bit, right? Because it obviously drew shares down to that level to fill the gap on the downside. And this announcement brought him right back up to that level. And so I wouldn't be surprised to see him consolidate right here and then use that as a base then to go up higher on subsequent drill results. So the other thing is, we talked last week at length about the lithium market. You put on your boxing gloves, right? It's not all rainbows and puppy dogs out there. We talked about some of the things, the Ford, cutting back production, et cetera, and how, some of the optics of the narrative was changing and not as robust as it had been. The same thing, like I was reading this week, a financing package for Liontown was rejected because the creditors were using a lower price for lithium, than was done in the economic studies. And so this change in leadership comes amid broader turmoil in the lithium market, obviously. And you have to think it's a bottom. These are not all-time bottoms, but bottoms in this part of the lithium story, right? Where you see stories like this, and you see management changes, and companies start to act because their assets or their plans come under threat. So I think it turns from here. I was also looking at the demand forecast for EVs. Outside of the Tesla earnings that we were mentioning earlier, and still double-digit growth this year globally for electric vehicles. And so the fundamentals, I think, continue to be there, and clearly the market like Mr. Brinsden coming to lead the company.
An important fact that came out of that Tesla conference call, and I did listen to some of it for the EV demand portion of it, but Elon mentioned the fact that Tesla specifically, which is less important, would see, less growth in 2024. But then he said on a macro level, the demand for energy storage, which requires a lot of lithium, is going to be absolutely robust. And so again, if you look at, any objective metric from objective groups that are actually, modeling this stuff appropriately, the demand curve continues to go this way. And so look, again, no crystal ball, folks. Are we at the bottom in Patriot share price? I don't know. Are we at the bottom in the lithium space? I don't know. It feels like yes on both fronts. We'll know soon. But I mentioned at the end of last year that 2024 had a lot of questions to answer in regards to Patriot. Still a lot, but those questions now to me are starting to get answered, and it's good to see the answers be positive answers, right? I think the next step is it would be nice to be able to attract another investment, either from an Albemarle or a Pilbara, now that, Ken's guiding that ship, or any other major that shows, confidence at these levels to advance the project forward at an accelerated rate. Flow through financing is probably still, really available for a company like Patriot and a project like Corvette. The premiums historically for Patriot have been, above 100% or right around 100%. So yeah, if it's at $8 now, you do a flow through of 16, $50 million and the endorsement from another big group. And again, Pilbara to me would be just a logical fit because of Ken's past there, and because the company just reported a fantastic quarter, which speaks to being good stewards of capital and actually knowing what you're doing. Pilbara's quarter was fantastic, right? There was a short squeeze on the ASX. Their margins were still something like 50%, using close to today's prices. And so the groups that are missing on revenue guidance, and the groups that are missing on margins, and the groups that are shutting down their projects, I've always counted on this. It's going to be the same thing in copper, folks. Projects that are marginal aren't going to make it, because you're always going to have price slumps, whether it's copper, whether it's lithium, whether it's silver. There's always going to be cycles where the price dips, and you can't just count on a higher price to keep your operation sustainable. There's a group, Minres, and 2 or 3 other ones in Australia that are going to the government as we speak to have a conversation about potential bailouts and potential financing, and basically there's some nickel groups as well that are joining some of the lithium miners. How that turns out, I don't know, but again, it speaks to Corvette and the world-class nature of it, because when you look at the mineralogy, when you look at the type of process that you're going to use to extract this, when you look at James Bay emerging, and I think again this is one of Ken's goals, is developing the James Bay region as the epicenter of the North American battery metals and chemical supply chain. It's a lot to be excited about, folks, and you just got to think in more than days and weeks. And again, every dollar that Patriot goes down or up is material to my bottom line. So I want to see it as high as everyone else, but it's definitely going in the right direction. And I love Ken guiding the ship for part 2. Should be fun.
Related, but not directly, I've been telling you and writing for some time that there was going to be the stickers on the cars. I was telling you about the Monroney, the Monroney stickers, right? I read this week that starting in 2027, the EU is going to have EV battery passports, where they're going to have the minerals that are inside the battery, where they came from, and their emissions information. So the blind squirrel found another nut. That was sort of an easy one to see coming, but I'm now official, at least in the European Union. So it's going to matter where all this stuff comes from, and there's going to be tiers. So, and again, that's years away. So the cycle is going to play out for a while.
Agreed. Agreed. One other piece of company specific news before we wrap up, because I don't want to be too long winded, but this is an important piece of news, both for me personally, because I own tons of Hannan metal shares, and I know you own quite a few as well. But it's important for Peru. Quietly here in the last couple of months, Palamina, who we're very friendly and familiar with, and have written checks to in the past, received an exploration permit. Hannan just received DIA approval for its maiden drill program at the San Martin project in Peru. San Martin, of course, is the joint venture portion of Hannan Metals' basin scale play. And so this is, about around a third of the land that Hannan Metals has in Peru. They have an entire basin of copper, gold, silver projects that have multiple different systems and types of deposits. And so this is the portion that JOGMEC is financing. It's a $35 million, that's US commitment if they see it through to the end. But San Martin being drilled isn't what's so exciting about this part. This permit and then this approval, what's exciting to me is that there was some local opposition guided by outside NGOs, as it typically is, to this permit. The land package that I'm really excited about, the Valiente project and the 100% owned stuff, there is zero local or NGO influence out there. There it just doesn't exist. So if they were able to get this approval across the finish line, it bodes well for future approvals and future permits. And I understand that behind the scenes, Peruvian companies have been very vocal with the Minister of Mines about the fact that, look, we're trying to spend money and invest in your country, and you're not making it easy to do so. And in some cases, outright not letting us spend the millions of dollars we want to inject into your economy. And I think they've heard that message. I think that message has been received. I am definitely not a local expert on Peruvian politics, and the Ministry of Mines has new personnel seemingly every month, so it can change. Peru is Peru, but great news for Hannan shareholders. Great news for Hannan. Congratulations to that team for getting that across the finish line.
Yeah, long time coming. Long time Hannan shareholder here, even, going back to the Ireland zinc days. And so the pivot to Peru, I think, was smart. It's going to take some time to play out, but a muted, albeit positive response to the market. And you and I were talking, nothing's getting a response in the market. So it was good to see it done. Hopefully it can be used as an example for not just Valiente and the other portions of their projects there, but, for others in Peru as well.
Agreed. I'm supposed to remind y'all every time to check us out at dailyprofitcycle.com for updates, market commentary, ranting and ravings from yours truly, insights from Mr. Hodge, and takeaways, opinions, and a bunch of fun facts from our talented group of editors at Daily Profit Cycle. I have to ask you for your take on gold technically before we get out of here, Mr. Hodge. How's it looking in your eyes? It's at that boring 2000 level again, which is music to my ears, because if that's the new floor with 103.5 US dollar index, it's going to be a great 2024. A golden one, dare I say.
Gold is bullish. Gold wants to stay above 2,000. It wants to do so even as the dollar and the 10-year tick higher. But gold is not gold stocks. And so I still think you have time to position in gold stocks. But gold is bullish and still worth buying on dips for sure.
I like it. Anything else you want to get off your chest, Mr. Hodge? 5% move in oil this week. Is that going to stick?
I need another week. So
right.
The same with copper. They both sort of ticked up a little bit, likely because GDP came out at 3%. I'm not sure if that holds or not. So for now, I'm leaning towards not. I think you still have time in the commodities to get positioned broadly. That the growth isn't as strong as that number indicates, but we'll see. And so I'm not going to give you an answer yet.
I like it. We'll save it for next week. We're recording a day earlier next week, folks, so you can expect your episode a day early, hopefully, if it all plays out the way we intend it to. I am Gerardo Del Real along with Mr. Nick Hodge. This was the 254th episode of our weekly therapy session that we like to call Investing in Bizarro World. I hope everyone has a phenomenal end to their month, and I wish everybody, obviously, a phenomenal February. Nick Hodge, send us off with some words of wisdom or encouragement, sir.
Let's see you. If you have any better luck figuring out the market than us, by all means, let us know.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.